but very meaningful.
Thanks for getting
Disruption in
that stuff
people's
for me.
lives. So our goal is to keep everything on schedule safely. Be mindful of folks who need time to work through the challenges of the fires, including in some cases loss of life and home. But this industry has been through a really tough couple of years, starting with COVID, going into the strikes, and now this. So it's really important that we try not to delay anything and try to make sure that these jobs stay safe. But definitely want to add that we are extremely grateful to the firefighters and first responders who are still fighting flames right now. These are the real heroes here. But Dan, to your direct question, no impact in 2025 on cash or deliverable. Nothing meaningful.
Thanks, Ted. We'll take our next question from Jason Helfstein of Oppenheimer. Is it fair to assume that most of the upside in the 19 million subscriber additions came from the Jake Paul Christmas Day football games? And how was the attrition or retention, I guess, post the Christmas Day games versus normal post-holiday levels?
Yeah, short answer to that question is no. At a high level, we've seen broad strength across content categories, across all regions. We've seen it throughout the entire year. And as we've consistently seen across our history, no single title really drives a majority of our acquisition or engagement. So even in an amazing quarter where we had 3 huge live events, we had an incredible fight, 2 NFL games, we had one of our biggest TV series ever in Squid Game Season 2, all very successful events and titles that we are thrilled about. Our estimates for subscriber ads driven by those titles combined represent a small minority of our total member acquisition in the quarter. So it's really the whole service that's working that delivered the upside that we saw this quarter. The vast majority of our net ads were driven by our broad slate and our portfolio globally. And Ted, maybe you want to pick it up for the last half of that?
Yeah, just putting some color around that. We really have built the business on
Yeah, baby.
regions, across genres, and we really focus that year round of having
Yeah,
a
what?
very strong slate of programming for our members. So we're thrilled that some folks came in for the fight, some folks came in for the games,
Yeah.
but they stuck around for Squid Game and for Carry On and for Black Doves and for 6888 and Sena and Nate Bargatze's new comedy special. All of those things all performed really well in the quarter and continue to in the days and weeks after the fight and after the games. And what's really been most encouraging is that the retention behavior of those folks who did come in for those events look a lot like the folks who come in for all of our other
Why is
titles.
it blacking out?
And so I just would add that it's great that all these big swings worked very well in the quarter. But to be able to have that translate into revenue growth meaningfully, everything has to be working. The product, the pricing teams, the marketing, the advertising, all those things have got to be working well. And we saw really strong execution across the board throughout the quarter and throughout the year.
I'm trying to get this stuff set up.
Thanks,
I just got home. So
our next
bear with me.
question is from Stephen K. Hall from Wells Fargo. And Spence, this is probably best handled by you. The US dollar has strengthened since your last results. And you said that you'll tend to underperform your margin targets when the dollar is stronger. What FX volatility do you think you can successfully hedge out in 2025? And what are the best ways to estimate the impact of currency movements net of hedging?
Sure, Spencer, I will take that one. So, look, roughly 60% of our revenue is in non-US dollar currencies. And think of it as the way we look at it is that amount, we try to hedge roughly 50% on a rolling forward 12-month basis.
I'm working on something.
I want to stress that we view hedging as sort of a short to medium-term solution at best. Our focus has always been to manage the underlying operating results of the company through natural hedges where we can, plus pricing and cost structure over time. So our hedge program is really just a price averaging program to smooth the impact of FX, reduce the volatility from big near-term FX moves, and avoid short-term swings to the business so that we can invest appropriately for both the short and the long term.
Thanks, Spence. The next question comes from Brian Pitts of BMO Capital. The advertising user base is growing quickly, and your ad tech has been ramping for almost a year. What are your biggest learnings and perhaps hurdles for advertising monetization in 2025?
First and foremost, we love our ads plan because it allows us to offer a lower price point for consumers. That's more choice, good accessibility. That is proving to be popular, and it means that we obviously have more people that can sign up and enjoy the growing range of entertainment we've got to offer. It's also the reason that we've been successful in driving that first ads priority we had in our ads goals, our most primary ads goals, which were to get to sufficient scale. So Q4 ads plan.
Hey, can y'all hear me okay?
Over 55% of signups across our ads countries. We've seen membership on those ads plan increase about 30%.
Let's go.
Last quarter, that was on top of 35%.
Just fix my camera.
The quarter before, on top of significant growth the quarters before that. So
Can
as you point out, we've
hear
seen significant growth since launch, which we're excited about. Maybe even more excited about the fact that the engagement of those ads members remains healthy. So view hours per member on the ads plan is similar to engagement on our standard non-ads plan in our ads country, which is a really good marker that we're excited about. So we've done the work, I would say, to meet our scale goals for advertisers in 25. And that means that increasingly we've been able to shift more of our focus, more of our attention on making the offering better for advertisers to increase monetization of that growing inventory. This is going to remain a priority and part of our roadmap for at least the next several years, likely years to come after that. But we're making solid progress already. For example, we exceeded our ads revenue target in Q4, which was an exciting milestone to get. We've doubled our ads revenue year over year last year. We expect to double it again this year. So that should give you a sense of the slope of monetization growth that we're on. And broadly, we think of this as we're making solid progress. There's considerable work ahead of us for sure, but we don't see specific hurdles that you mentioned in the question, other than just doing the work. So we think our path is relatively straightforward, and we're confident we've got a significant runway to continue to grow that revenue.
Great. And we have a follow-up question on advertising from Jessica Reif-Ehrlich of Bank of America. On advertising, do you have all the tech and tools you need to significantly scale up and move from the crawl to walk phase?
Yeah, I think you can say that 2025 is the year that we transition from crawl to walk. A big part of that is standing up our own ad stack. We launched that in Canada, and that's gone well. We're testing, we're learning quickly as we prepare to then roll that out in 2025 across the rest of our 12 ads countries, starting with the US in April. And the biggest initial benefit we have of using our own ad server is just enabling us to offer more flexibility, more ways of buying for advertisers, fewer activation hurdles, just improving the overall buyer experience. And of course, that is meant to drive increased sales and the ease of transacting with Netflix. And we're already seeing the impact of those benefits in the revenue growth in Canada. So that's exciting and improves our optimism around it. And then over time, the first-party ad tech platform allows us to deliver more critical capabilities to advertisers that we hear from them that they really need. So more programmatic availability. We're talking enhanced targeting. We're leveraging more data sources, more measurement, more reporting, more incrementality studies. So being on our own tech stack enables all those advertising features, advertiser-facing features. But the other big benefit is it just creates a higher quality experience for our members. So it increases relevance. That's good for them. It's good for advertisers. It's good for us. It's good for everybody in the ecosystem, essentially. Just so, to reiterate, we got many years of building ahead of us. The roadmap is clear. We're committed to iterative innovation in advertising, just as you've seen us do in many other places. And as I mentioned before, while we've got tons of work, we feel the path for the next several years, at least, is fairly straightforward. We're confident we can continue to grow revenue at a solid pace and earn a growing piece of that over $25 billion in CTV ad spend.
Awesome. Thanks, Greg. I'll now shift to a couple of content-related questions from analysts. The first is from Ben Swinburne of Morgan Stanley. He asked, Ted, do the strong viewing numbers for the NFL games leave you more interested in full-season sports rights for Netflix, or do you still see full-season sports rights as generally unattractive for Netflix?
Well, let me start with the viewing of the NFL games, which there are in-season games, and they're the two most streamed NFL games ever. The average minute audience for those games were 30 and 31 million. It's phenomenal. And Beyonce also set a very high bar for future halftime shows, even for the Super Bowl. So we're really thrilled with the viewing. We're thrilled with everything about it. all that being said, we are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that those live events. So when I look at this and say it's a really fantastic thing, but but it doesn't really change the underlying economics of full season big league sports being extremely challenging. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore. But right now, we believe that the live events business is where we really want to be, and sports is a very important part of that, but it is a part of that expansion.
Thanks, Ted. And Rich Greenfield from Lightshed has a similar follow-up question. Has the fight and WWE Raw results influenced your decision process on additional rights like the UFC?
Yeah, well, look, not going to comment anything specifically like the UFC, but WWE is off to a great start. Our first week, we drew about 5 million views, which is about 2 times the audience that Monday Night Raw was getting in linear television.
Dope.
Pretty consistent with how we modeled it, how we'd hope to build the audience for the league. We also saw that the non-live viewing, so in the day after the live event, viewing grew by 25%, mostly outside of the U.S. time zones. So this is a new viewing in the UK, in Canada, Mexico, Australia, Brazil, particularly big markets. So we're really thrilled to see how that's going so far. In the U.S., our viewing of Monday Night Raw was as big as the Monday Night Raw viewing has been in 5 years. So we're super thrilled with how that's going and how that's coming out. Again, just not to be overly repetitive, but we're going to be mindful of the bottom line, and it's really important that those economics do work, and that the big league sports, full season economics are very hard to make work. And so for us, we want to be able to bring value to the sport like we have to date with WWE certainly, but like we have with the NFL too, where we were basically able to bring a big audience, a young audience, a more global audience than linear television, but that has to be reflected in the deal as well.
Thanks, Ed. And that's a good segue to our last question on sports to round it out from Vikram of Baird. Could you elaborate on the decision to acquire rights to the FIFA Women's World Cup in 2027 and 2031? What were the features of the event that made it attractive? And how does this fit into your broader strategy for live sports?
I think it fits perfectly into the strategy. Women's World Cup is a real TV event, totally consistent with what we're trying to do here. These matches set a bunch of viewing records in 2023, and women's sports have only become more interesting and more popular since. It's a month-long event filled with drama, played by some of the greatest athletes in the world. We're thrilled to be the home of those games in 2020. Thrilled to have the time to start telling the stories of these teams and these athletes, like we've done so well with other sports, with our series and our documentaries.
Great. Another question from Rich Greenfield of Lightshed Partners. Did Carry On prove that movies can break through without a theatrical release? In less than 2 months, Carry On was well reviewed and has racked up 313 million view hours, and the film generated significant buzz across social media and is set to surpass Bird Box viewership. Was there an unusually high level of marketing spend for this film, or did the buzz build organically on Netflix?
This was a great example, I think, of a movie born on Netflix that can generate an enormous audience and tons of buzz. The movie, in fact, one of the producers called me over the break to tell me that this is exactly what it feels like when I have a big movie in the theaters, which was a great thing to hear. And we even got injected into the debate, the age-old is Die Hard a Christmas movie debate, and is Carry On the new Die Hard, which is, we're definitely in the zeitgeist, in the culture, drawing a big audience for a movie that premiered on Netflix and had a very modest marketing spend like we typically do. And I think it actually draws a lot of attention to how powerful the platform is to promote to our own members, how Netflix can talk to our members where they are, which is on Netflix, to tell them about a great new movie they're going to love.
That's the contract I'm in right now.
And then we have our social channels with over 1 billion subscribers that actually keep that conversation going. So I think it's a really strong proof point that a movie born on Netflix can be a big hit and be the center of culture as well.
Thanks, Ted. And for the record, I do think both Die Hard and Carry On are Christmas movies.
To be continued. To be continued.
Yeah. And I think that's a great segue to Doug Emliff's question from JP Morgan. Ted, does the agreement to debut Narnia in the theater in 2026 suggest any shift in your overall theatrical strategy?
No change at all to our theatrical strategy. Our core strategy is to give our members exclusive first-run movies on Netflix. The Narnia IMAX release is a release tactic. We routinely release movies in theaters before, a couple of weeks before, to qualify for awards, to meet festival requirements, and to prime the publicity pump a bit. In the case of Narnia, it's a 2-week special event. I think it's very differentiated from other runs because I doubt anyone has a screen as big as an IMAX screen at home. So it is kind of a differentiated consumer experience. But we've done variants of these releases many times, and doing it with IMAX kind of greatly simplifies our release process as well. But mostly I want to say I'm incredibly excited to be working with Greta on this movie. We're super excited to get it into production so we can talk about how great this movie is, more so than which screens it's on. She's an incredible director, and this is a really exciting project.
Right. Our next question comes from Vikram from Baird, and it's about plans and pricing. How do you plan to approach the cadence and magnitude of price increases going forward, particularly in your largest markets? What are the signals that inform those decisions across the different regions and plans?
Okay.
Take this one. Our pricing philosophy hasn't changed. It's pretty much the same as we've talked about for the last several years. Of course, we look to continually provide more value to our members, seeking to wisely invest to increase the variety and quality of our entertainment offering. And then we listen to those members. We listen for signals like engagement, retention, acquisition. There's more secondary signals as well, all to tell us when we've achieved that increase in value. And when we've done that, then we ask them to pay a bit more to keep that virtuous cycle going. You've seen us take a price across a number of markets in EMEA and APAC and LATAM over the last couple quarters, across most plans, and including ads too. And those changes have gone smoothly. You can see those in our results. We certainly expect the same for these latest changes. And I think it's worth noting and reiterating that we believe that our starting price, $7.99 in the US, $79 Canadian in Canada, for standard with ads, is an incredible entertainment value, and it's a highly accessible entry point. So ultimately, we feel really good about our long-term monetization opportunity. We earn right now only 6% of the revenue opportunity in the countries and segments that we currently serve. That was the other one I posted. And as long as we continue to deliver on improving the variety, the quality of our TV and film slate, we gradually expand the offering with newer content types. A little bit more affordable. We'll believe we'll be able to increase that share progressively every year.
If I could just chime in on you, Greg, I just... when you're going to ask for a price increase, you better make sure you have the goods and the engagement to back it up. And I feel like what we have going into 2025 is just that. We have the returning seasons of our biggest shows ever: Wednesday, Stranger Things and Squid Game, Night Agent, Ryan Murphy's Monster, You, Alice in Borderland from Japan, Delhi Crime from India, a new seasons of Drive to Survive. And on the film side, we've got new movies from Oscar winners like Guillermo del Toro, Catherine Bigelow, Noah Baumbach, the Russo brothers' new film, Happy Gilmore 2, a new Knives Out film.
Happy Gilmore 2?
Live, obviously, we've got
Let's go.
the
They
SAG
doing
Awards
it
next month.
They just announced it
Christmas Day
officially.
Football,
Let's go.
Monday Night Raw every Monday night, and a few surprises there too. So I definitely feel like the strength of Slate is never been better.
Happy Gilmore 2, y'all. Let's go.
Great. I'm going to now turn to a few questions on engagement. So our first one comes from Peter Sapino of Wolf Research. Engagement is stable based on data from third-party panels. Is engagement growth a strategic priority for Netflix?
Absolutely, and I think we look at this and say what we're trying to do is entertain the world, and you measure that in how are people pushing play and sticking around for the things that they love. And Bella and her team are really kind of programming into those moments of breadth and of quality, of trying to meet people where they are, finding the something for everybody and something for every mood in every language and in every part of the world. It's tough work, and that they have cut out for them, but they're doing the job of winning over those moments every night and getting people who spend right now at about 200 billion of hours of programming or streaming last year.
Hey,
our average members watching for about 2 hours a day. So we've still got plenty of work to do to grow that, and that's what the team is very highly focused on.
Yeah, and not just
Oh, go ahead, Greg.
All right, I'll do so. Not surprisingly, I would say we consistently see that improvements in engagement are correlated with the other key business drivers that we have. So it obviously drives retention, acquisition, et cetera. And so we're excited that we've seen continuing growth and engagement, and look forward to more of that. Spence.
Well, you hit it. It all starts. We talk about it a lot. The flywheel starts with engagement. It's engagement, revenue, profit. It drives the flywheel. And the rest of the numbers or points you hit on, I think, other than maybe one other, is just to kind of note that as a reminder, in the letter we talked about the fact that we will now, going forward, twice a year on the same day as earnings, release our engagement reports, starting with our Q2.
It's okay. I'll always be another play.
Our earnings report will also include engagement report, just to emphasize a kind of a steady drumbeat with earnings and with our performance.
Rochelle,
and to get a little more granular even sooner, our next engagement report is going to publish in February, so it's next month.
Yep. Good point.
Great. And
we pump it.
And then our second question on engagement is a little bit broader. It's from Justin Patterson of KeyBank. What are the key steps to competing more with short-form video platforms for engagement?
Well, our goal here is to entertain all audiences, including younger audiences who may be watching disproportionately more short-form content.
990, let's go.
Now, the beauty is that those folks all love film and TV shows as well. So we're constantly entertaining them with projects that get them so excited that they push play, they stick around, they go on their social media accounts and talk about the shows. They do tributes to the shows. You see wait till you see the new season when Wednesday comes out. You're going to see all the social media platforms get flooded with tributes to this work. Our core is in kind of professional, longer form storytelling, and that's a very big and enduring business.
We're going to 1036.
Again, as things get pulled, as eyeballs get pulled into other places, we definitely want to be there for them as well. I do find that these short form services also are a great breeding ground for new storytellers. So you see, we're super excited to bring Miss Rachel over onto Netflix. Parents are excited about that too. But we also got a rich history of finding projects in other places and having them up the game. Somebody Feed Phil, which is now shooting its 8th season. So I feel like those the work we have to do there is to win over audiences with programming that they love. If it's Heartstopper or Stranger Things or Ginny and Georgia, Elite, Outer Banks, that's what we have to do. We have to outcompete for those moments of entertainment truth.
Let's go.
I think consistent with that, and just expanding on it, I think we see ourselves as playing a specific and differentiated role in the ecosystem. So whether it's being a place where those great storytellers that Ted mentioned can graduate to, from whether it's from places like YouTube or in the theater or any other place that they come from. We know that consumers want a spot to enjoy great movies and TV shows, to have a user interface and user experience which is designed specifically around that. We know that our creative partners need someone that can participate in investing in those, to share the risk that's inherent in bringing those stories to life. So we want to double down on supporting that part of the ecosystem, and we want to make sure that shows like Stranger Things or Wednesday or Heartstopper, Outer Banks, which have huge viewing and fandom, especially with those younger audiences, continue to have a place to be found, loved, and enjoyed.
Great, thank you. Our next question comes from Alan Gould of Loop Capital. How do you assess your progress in the video game space? How have the engagement trends been? When do you anticipate video games will have an impact on subscriber growth or retention?
Okay, so a lot there. I'd say we've learned quite a bit and made some good early progress since we've launched games. We've, of course, launched a bunch of games. With some highlights amongst them. The critically acclaimed Oxenfree 2 stands out. Certainly Grand Theft Auto, where we drove tens of millions of downloads. We've got fan favorites based on Netflix IP, things like Too Hot to Handle, Emily in Paris, Selling Sunset, and to our latest big release, Squid Game Unleashed, which we really think validates our Netflix game formula, which is enabling this virtuous cycle between linear content and simultaneous game offerings. And we are just scratching the surface today in terms of what we can ultimately do in that space. But we already see how this approach not only extends the audience's engagement with the universe and a story, but also creates a synergy that reinforces both mediums, the interactive and the non-interactive side. So based on all of those learnings and under the leadership of Lan Tascan, we continue to refine our strategy. And we're going to be focusing on more narrative games based on Netflix IP. These are consistent fan favorites, and we've got a lot in the library to work with there. We'll also be introducing party and couch co-op games on the TV delivered from the cloud. We think of this as a successor to family board game night or an evolution of what the game show on TV used to be. So we're excited about delivering some cool experiences in that space. We'll deliver games for kids. This is no ads, no in-app payments. It's a safe space for kids, just included with your subscription.
Netflix,
and of course, we want to do more recognizable mainstream titles, whether that is licensed titles like GTA, and we're going to have more of those big licensed titles to come that we're looking forward to, as well as homegrown titles based on our IP, like Squid Game Unleashed, which I'll just reiterate. Squid Game Unleashed reached #1 in action games in the app stores in 107 countries. It's on pace to become our most downloaded game. And so to your question about impacts on the subscriber side, we already see positive impacts in acquisition and retention from our game playing members. Now, those effects are relatively small currently, but frankly, so is our investment in games relative to our overall content budget. And we're going to stay disciplined about scaling that investment as we see continued scaling and member benefits. So to try and summarize, there's plenty more to do in this space, but we're breaking into a whole new content category, which, by the way, drives approximately 140 billion in consumer spend, ex-China, ex-Russia, and not even including the ad revenue. So we're iteratively showing our members that we are a place to discover and play games, and we look forward to continuing to launch bigger and bigger games every year.
Thanks, Greg. We have a couple late-breaking questions on the forecast that analysts have submitted, so I'll wrap up with two of those questions. This comes from Jason Helfstein of Oppenheimer. You spent roughly $17 billion on cash content spending in 2024 and will spend about $18 billion in 2025. How should investors think about long-term spending levels? Is there a point where you reach an equilibrium where you don't need to increase spend beyond inflation?
Want me to take that?
Sure.
Sure, I'll take that one. I think we're a long way from equilibrium. As you say, we're taking up our cash content spend this year, estimated from 17 to 18 billion. That's in the context of we're small in terms of view share and penetration everywhere around the world. We're less than 50% penetrated into connected households. You heard from Greg that we're only capturing about 6% of our estimated revenue market. So we have a long way to grow. It's really about where do we put the next $1 billion, and then beyond that to work in the most impactful way. Over the next year or so, you'll see that in areas like continuing to build into big scripted TV series. As you heard from Ted, we're continuing to build out live. We're continuing to build out our original programming in each of our regions around the world, and also seeing more and more kind of impactful licensing opportunities. And I think we kind of grow from there. So the opportunity, there's a long runway to continue to grow. We do it in a disciplined way, right? So we kind of set our growth based on our top line growth and our margin targets, and then we kind of allocate as we can across the business for highest impact. And I think you've seen us do that in a responsible way, where our cash spend and our content cash amortization, it's sort of a 1.1 ratio roughly, plus or minus, between our content amort, which runs through the P&L, and the cash spend, which runs through cash flow. And both are growing slower than our revenue growth. So I think you should see us continuing to grow in that way for the foreseeable future as we continue to grow more and more engagement and please more and more, hopefully, growing audience around the world.
Thanks, Spence. And our last question comes from John Blackledge of
I feel you,
TD
Rochelle.
Cowen.
It's okay. It's always another
Can
play.
you please talk about the drivers of raising your 2025 operating margin guidance? What are the biggest points of leverage driving higher margins this year? Spence, you want to take that?
Have to crack 1,000.
Yeah, sure. So we're always kind of looking to
this play isn't safe.
Balance our revenue growth with strategic investment into the business. And We think we've balanced that well this year. You see, we guided to 12 to 14% top line revenue growth. If you kind of do the read through in terms of based on our margin guidance, what that we would expect in terms of our implied expense growth, you can see it's sort of high single digit, 9% plus or minus expense growth expected for 2025. And if you break that down, we're expecting sort of high single digit, roughly content amortization growth. So still below revenue growth. So some margin there. And that's based on, again, that 18 billion of plus or minus expected content cash spend. And the amort moves around a bit based on the timing of titles and releases, but high single digits, a pretty good estimate. And then we're investing into our growth priorities. We're pretty heavily investing into our product and engineering teams to build out ads and live and games capabilities, and also our new user interface to enhance our product discovery. We're also investing in the marketing and sales line, mostly on the sales side as we build out our ad sales organization and go-to-market capabilities. And beyond that, our support areas are kind of growing sort of low single digits. So
subscribe to the channel
across the board for the most part. We're driving margin improvement in a way that we think is
use that super
appropriate for the business while investing into our growth.
Great, thank you, Spence, and thank you all for joining us for our Q4 earnings call. And we look forward to speaking with you all next quarter. Thanks very much.
Hold up. Gifted memberships. It's a gifting memberships moment right now. Who's getting it? Gifting some memberships, y'all. Hold up. Welcome, Raider. Welcome.
Did you know that you can have permanent teeth in just 24 hours? That's right.
Who else we got? Welcome, Jimmy. Welcome, JP. Welcome, Steph. Let's go. Welcome, new members. I gifted 5 memberships just because we ate today, and I'm feeling giving. Let's go. Absolutely crushed it. Love to see it. All right. All that's popping in right now. So yes, I am still in CLV, right? I'm still in CLV. And I'm up 50%. We closed above $28. That's a strong signal that we're going to hit my take profit target of $28.94. Okay, I'm going back to Netflix. Hold up. Okay, I might do this full screen. Let's do this full screen. Where is my trading view? Let's go reset this. Transform, reset. Fit the screen. Boom. All right, I'm gonna get rid of some stuff real quick. Thinkorswim, we don't need that. We don't need that no more. We don't need that no more. Hey, so I can't gift upgrades. The gift is the SoFi play that you're up 400%, Rochella. Come on now. You got 400%, you upgrade. That paid for itself. Come on, y'all. Hey, if y'all members and you're not an orca or an angler and you made a lot of money today off of some plays, come on now. Join the orcas and anglers because you're making that back too easy. You're making it back. And we get to go over these deep dives. We talked about this whole setup. Before it even happened. Talked about the whole thing. I broke down exactly what I would do when we fell off. I called the sell-off. I said we're gonna get to 826. We actually fell to 824, but I said 826, close enough, and then we got the bounce. Now, regretfully, I missed this opportunity to get in because I did call this bottom, right? I missed my opportunity, but I was trading carefully because you see sell-offs typically right before earnings, especially if it's going to be more bullish. That's again, like this pattern is pretty consistent. I'm right 85-90% of the time. Okay, so before earnings, if you see a sell-off, then likely the stock is going to rocket after close or after earnings actually post. Okay, so that's just a common thing. That's like, it's a theme that I'm noticing, that I've noticed over the past several years. Okay, but we're not out of the dark. Like, I feel great like here, but we're in the after hours. I can't take profits right now in after hours. Now you might think I'm safe, but if Netflix doesn't crack $1,000, and let's say somebody says something stupid on Twitter, and this thing can flush all the way back down and all the gains can go away, and I'd just be like, man, that sucks, right? It's just one contract. Hey, one contract, 400%, you know? That's good. You just turned it down to 400 or $4. Hold on, what is this? Oh, okay. I was like, why do I see a chat on something else? But anyway, if we got 19 people here, I mainly was just talking about this this Netflix live call. Now, I can tell you where I think it's going. If y'all want me to do that, I can do that. That way, people aren't just FOMOing into the play. Hey, Harlem, 190%. Shout out to you. Let's go. Hey, Mercy, welcome to channel supporters. Thanks for becoming a member. Shout out to you. Let's go. We got a new member. Come on, it's not hard to join. Everybody look at the top. It's pinned to the top. Click that button and join the plan that works best for you. If you just want to support your boy in the channel, then be a supporter. If you want early access to the videos and the drops and like members only live streams where we do like 15-minute rapid fire like stock analysis, then be a minnow. If you want a little bit more than that, then become a dolphin. If you want more chart analysis and weekly strategies, become an orca and an angler. If you want monthly setups where the beginning of every month I cover like the entire month for the market, and that video, that live stream that I do should pretty much have you set up for the entire month as far as trading. You should know where your entries, your exits are, and you can play the levels because we go over it. That's how we get down with the anglers, okay? So if you're not in that, consider it because you should make your money back, all right? Thanks for becoming a channel supporter. I appreciate that. I can't say your name. Is that Jesus? Is that how you say it? Is that Jesus? I'm sorry if I'm wrong. I don't want to say Joseph. I don't want to say that because that's disrespectful. So you tell me. All right, JSD. That's what I'm going to call you. All right, JSD. Let's get it. Hello, family. Just logging on. Good evening, lady. Hey, welcome. So we have this pullback that I don't like. Of course, we hate pullbacks. And then on top of this pullback, we have a gap. Okay, so like we have, this isn't much of like this isn't like a supply zone or sell off. I mean, we just lost some steam here. So like the buyers lost some momentum, right? So then naturally that means that the sellers were kicking in once you start seeing these candlesticks get a little thinner. But this volume wasn't strong for the selling volume. The bar looks good, but the volume doesn't really match up. So we'll see how this goes, but I don't like this gap right here. So if we can close the gap between this candle and this candle, then we're straight. But if we can't, then we might have a significant amount of retracement because this right here is an imbalance, right? An imbalance. Jose, thank you. So I got it right. I just, I said a bunch of names, but oh no, I didn't say Jose. I said Jesus. But Jose. All right. I appreciate the correction, family. Jose. All right. So, what do we got? We got 22 people here. Make sure you guys hit the like and the subscribe. Right now, we are looking at a retracement, and I'm about to just do a quick chart analysis as far as where I think we're going if we continue, okay? But you see this note right here. If we break 1,000, then I think we're headed to 1037. And I would love to just see that happen in the morning versus go through this song and dance all night. Like this wall, we need to break through it. Otherwise, it's just not going to be fun. So anyway, what do we got? So we got a new section. Hold on, here we go. I'm just going to be quick about this. So right now, for me to stay happy, we need to stay above this 974 level. I don't care if we retrace to it, that's fine, but I don't want us to fall below this level, okay? And then essentially, if we break above the 1,000, I already told you like where I think we're going, but that's more in the long term. Near term, we're about 124.61, okay? So if you guys are looking for entry tomorrow, free game, if you're looking for entry tomorrow, then I would be looking for a break above $1,000, right? Actually, maybe. We have to double check and see how it reacts to 997, but I'm just looking at this as a psychological level of resistance that we did not hit yet. So if we hit 1,000, we need to see if we see resistance. And if there are sellers there, they start to chime in, then we're looking for it to crack this level. And if it cracks 1,000, then the ultimate distance is going to be 1026. However, we might see some consolidation right here in this area, which would be about 1013. Okay, so if I have to draw you a little picture, we go up here, we retest, we get rejected, we come back down, and then we come here. We might do a false breakout and then come back down on you, right? But it'll be like a higher high type situation. If we have bullish momentum where we have like an increase in volume, right, as we're going into $1,000, then you're looking for some calls, right? Because you're cracking this with a solid bar and momentum. Likely it will come here and then we'll retest it, and then before we head up here, and then we would just do the song and dance around this region. But I don't know if that'll all happen tomorrow, right? That's kind of what it'll do. It'll do this thing and decide if it wants to continue up or not. And it's the same thing that it did. It's the same thing that it did right here, right? It goes on the move, then it you find some accumulation, right? Hey, welcome to the Minnows. Big dog, I see you. Let's go. Appreciate you. Thanks for joining. What time is it? I got my other business I got to go take care of. So yeah, so we got this run up. We got some consolidation, which happened to be accumulation, right? And we can see this, that it was accumulation because the sellers never took over, right? The sellers, they came in with this inverted hammer, and you would think that like naturally this is a candlestick that represents a potential reversal, but the volume didn't match it, and then the bar to follow was significantly lower, right? There was no gaps or anything like that. So once these two bars kind of closed and we went green right away, this bar was pretty solid, right? It's pretty much an engulfing green bar, right? It's an engulfing bar. And like this right here just kind of negated this, even though we still had this to break, but the decrease in momentum right here and the increase in this green, right, tells you that you're more of an accumulation versus distribution, right? So here we are again. We're in the same boat. We're in the same boat. 29 people watching. Please make sure you hit that like and subscribe. I'm going to be on here for like another 10 minutes, and then I got a jet. All right, so this is great. I love to see it. So what do we do, right? We had an imbalance. Hold on. And the bar never closed, right? So like our imbalance was significantly 8 through. So here to here. So that's not too strong, right? So that followed by this bar, we're going back up. This was just a healthy retracement, but we had significant reduction in selling pressure and then it didn't follow with another red candle. So even though this is a solid bar with no wicks, this kind of came in. The bulls are still here and they're strong. Love to see it. Now if we look at the session volume profile, right? That's this baby right here. It's telling you, right, that you're starting to see an increase in buyers and sellers. Like, so there's an increase in agreement on the price at this level. So right now, 995.96 would be considered like a resistance level that we need to crack in order for us to get to the 1,000 mark. And we're looking at this area. Hold up. All the stuff I'm talking about is what I go over with the orcas and anglers. So if y'all want more of this, then join up. All right, so this right here, this becomes our low volume node support level. Okay. Right. So that's where we are. I would love to not crack this, and then we stay above this green bar, and then, like I said, what was it, like 95? I failed to draw my line as far as where the resistance was. Hold up. But I'm trying to get y'all set up for tomorrow if y'all do decide to play it. I can assume that, you know, after earnings, we're going to see some cheaper contracts. But we will see. Because right now, before close, the IV was 119. It was like 119%, right? So IV probably got reduced. Unless there's just an increased interest in this. And if so, then IV could have went up to 150, 170. And if that's the case, your boy just came up about 15 G's. And I love to see it off of one contract, right? But we will see. All right. Make sure y'all hit the like, hit the subscribe, hit that super chat if you want to. I had a goal that looks like it's not going to get hit. But if you can appreciate it, become a member. You know, just to support the channel or do whatever you got to do. If you are a member, come on, be an orca, be an angler. You know we eating. Let's go. All right, but this is healthy. This is healthy. Okay. Does that make sense? Do y'all see where entry is on this if you decide to? Now, I got a couple minutes, and y'all already know I'm the SoFi guy. So I could, if you want me to do a quick look at SoFi, put a 1 in the chat. I'll spend 2 minutes talking about it. If you don't, that's fine. Just hit me with the question. Let me know. Okay, I lost people. Hey, let's go. Netflix about to take off. Okay. Hey, 1-1 is more than enough. If I see 1-1, it was good enough. So let's do it. We got the ones in the chat. Let's look at our baby SoFi. Oh, come on now, Netflix, calm down now. All right. So SoFi. So I call this, and y'all already know that I reduced my position size quite a bit. Now I did do it a little early because I hit my take profit target of 17.97. If y'all been following me, then y'all know. Thanks, Rochella. Yeah, $2. Hey, I appreciate that. But, you know, you can stack those up and just become an orca, you know, just upgrade. just stack them up. It's $1 a day. All right. So if y'all been following my SoFi video, I went through the gambit. I gave you guys like 10 plus take profit targets. Hopefully y'all know what I'm talking about, but I keep posting it. I put it in the community tab, so y'all all should see it, right? But anyway, my max take profit target for SoFi was 19.97. I think that's what 19.97. My take profit target below that was 17.98 or 97, something like that. And sure enough, or was it 18.83? It was 17.83. Okay, and sure enough, we had hit my level. We had hit that level of 1783. Where was it? Because it was like early. Yeah. Yep. Here it is. We hit it on the money. I call that like perfectly, right? Now the problem is that your boy, like, look, my fundamentals told me that I should have stayed in, right? I should have stayed in because I seen an increase in buying volume. So we had strength going into this position. But this first rejection right here, right? The one fell, and then the two, right? Like those told me like, this wall, we might not be able to crack it. So I just, I bailed on a good portion of some of my positions. But come on, we rode this from like $12. So it is what it is. $14. I know, $10, $12. Okay. I hit my target. Hey, shout out to you, lady. All right. Okay. 437. So we did this. And then the first thing I did, I was keeping y'all posted the whole way. So we cracked $18. We didn't hit my target of 19, but $18 I knew was a psychological level of resistance. It's not really a big one, to be honest. But I called the head and shoulders. I called this before close. Where's my tools? So I called, this is a textbook head and shoulders pattern, right? So I called that. The moment I called that, I was like, man, hopefully people get it, because we're probably going to sell off right before close. And I also stated if we closed below 1797, then likely, the run is done for a little bit. We're probably going to just consolidate, bounce around, or do a little bit more sell off. If we pump, then great. I'd love to see it, but look at the I can't get rid of this. Yeah, here we go. So this is the volume profile. The point of control is 1803. So of this new range, right? We're well below that, and we're failing to get ahead. So we're seeing more bearishness occur right here, right? So right now, SoFi doesn't look good. It looks like we're gonna fall down and retest at least my the 1783, which is a previous target, a previous level of a take profit target. So you already seen we cut through it, pretty much wicked up if you're looking at the 15-minute chart, and then here we are. So where's SoFi going? Again, like I said, I have a different SoFi chart, I think, that has more of my levels set up. Where's my SoFi chart? Come on now. I got to get going. Come on now. Let's try that one. Give me a minute. I'm trying to see if this will pop up. Okay. Hold on, I got so many like templates. I just want to see where my previous data is, so I'm not just doing stuff twice. All right, it is what it is. All right, it is what it is. So now that's what we got. So how do you play SoFi? Like, again, earnings is the 27th, y'all, and y'all gotta be aware that the 27th is earnings, but 2 days after that, the Fed is talking, right? And I think it's rate cuts, but I can't remember. But 2 days after that, like, you gotta be careful, because right at that point, like before that point, I can see them like selling off SoFi or just like creating a lot of FUD or whatever, just to get people out of position before it takes off. All right. Hey, shout out to you for taking profits. Tesla, please. Yeah, I said short Tesla and I got smoked. But I got smoked. I wasn't too happy about getting smoked. And my chart looks like a mess. So let me just clear this up. Reset. Remove drawings. Let's just start from scratch. So essentially with Tesla, what's today? The 21st? All right. With Tesla, I called this sell-off, right? I just missed my entry. I called this yesterday. I made a video on Tesla. And the only reason why I missed this is because SoFi was taking off and I was busy and I could only focus on a couple like options at a time, right? I had like 3 different brokerage accounts that I was managing at that point. So this, if you caught that, congratulations. Dead giveaway was when we didn't retest, and then we see this loss in volume in the pre-market, and then this supply zone happened. Then this engulfing red bar, right? engulfing bar. Once this fell below this line, which would have been like like a neckline, right? This opened below it, retraced to touch it, crash, right at open. You had time though. If you go to the 1 minute chart, we had time to enter. I got it quick. We had time to enter. Okay. Plenty of time. Again, this is the neckline at 433.30, and then it just crashed. All right. So after this, I'm thinking, okay, well, likely type of like retracement, right? And likely do what do you call it? Like a bear flag. That's kind of what I was suspecting, but I got in too early. I warned everybody that I was in too early, and of course that means I got smoked. Now, because I'm more of a swing trader, this play right now for me is probably down like 47%, right? But I only put in what I was willing to lose. It is what it is. Right now, for as long as we're in this channel trading, right? Tesla is going up, right? This right here, right? Then we got to play it up to the next level. But here's the problem. The problem is, again, I see bearishness. We have an engulfing bar, and we fell below this halfway point right here, and which is also like a little bit of a neckline. So at 423.63, if we fail to break this level, right, then and we go to retest this ascending line of support, then likely this is what's going to transpire, right? So it's going to go here, it'll get rejected, come back down, it might come back up just a little bit, and if it lives on this line, then it's ready to come out, down, and boom. Now I kind of explained this the other day, but will it happen? I don't know. We'll see. Right now, this is a bullish candle, bottom wick, but at the same time, we have this gap, this difference right here, which is an imbalance between two bars. We love to see it. When you see a big drop like this, you got a good volume right here. It's only 16K. It's not too crazy. Yeah, that's nothing, but just after hours, so whatever. So yeah, that's it. It's essentially, you can short Tesla if we crack this level. Okay, the next neckline right here, this is a previous resistance, which would become a support, which is 421.39. So you essentially want it to live underneath that level to be more comfortable, right? You want it to reject underneath here, and then you want to see momentum, like a seller's momentum, cracking this line, this ascending line of support. If you can see that, like an increase in red right here, plus is cutting through, then look for shorts, right? Elon did some bogus stuff, some things that you can say it's not a big deal, you can say it's misinterpreted, but you call a spade from where I'm from. And when I seen that, I was like, everybody know what that looks like, and he did it twice. Like this thing, I'm telling you, man, like if I can tell the future, if I seen something like that, man, I wouldn't like it very much, right? Hence this sell-off, in my opinion. Now we have retracement, and I would love to see it cut down to about here. Now, the one thing I'm about to do before we cut out is look at the Fibonacci, okay? Because I want to see what the retracement is. And look at that. We're at the golden pocket. I don't know if you guys know much about Fib, but again, like everything I'm talking about, I go into a little bit more detail with my orcas and anglers. So become a member, right? So this yellow line that you see, this box, I'm just going to do this and make it gold, right? Let's make it gold. Or yellow, whatever. No. Gold. Okay. And then I'm going to send this to the back so it's not so crazy. Visibility send to back. All right, so this is my This is my gold zone. Oops. I'm not trading gold. Gold zone. Okay. Of the Fibonacci. Right? So, look what happens. We go and we retest this zone and we're being rejected. Elon and his Tesla bots are being denied and it's going to the scrap heap. I don't know. But yeah, that's what I got. So Tesla right now is technically, bullish because of this right here, but it's just retracement as of right now, unless we crack 425.03, which it lines up where this with the previous level of support. If y'all can see that, I'm gonna just draw a line quick. So if Tesla can't crack 425, right? If it can't crack this level, then it's still short. Just so you know, we're short Tesla. Okay, and it's gonna gravitate all the way back down to 414, which is a point of control, which is where the buyers and sellers are in agreement of price, right? So we'll see. Hopefully I can print tomorrow, but if I don't, I don't. I play with money I was willing to lose. Let's go. All right, he effed up. Yeah, he did. For real, for real. I got, dude, like the sound, like that was like, how you tell somebody to F off and then you emphasize, you put the whole thing in there. You make sure they hear the, right? He made sure you heard it. Like, come on, dude, he did it twice. He 360 it. He did. Come on, man. Come on, dog. I can't get down with that. I don't care who he is. The expression was all over his face. It was what it was. Exactly. It was what it was. Like, dude, his face said everything. He looked like a straight up, like, you know what? I'm not trying to say nothing. He looked like what he looked like. Y'all seen what I seen. That's one thing I don't get. Some people, you can be looking at the same thing and then people interpret it different. Like I get when things aren't clear, but when things are as clear, like if somebody says something stupid and it's stupid, then everybody else should know it's stupid too. Like don't go ahead and try to translate some shit that don't make sense. Oh, I'm about to leave right now. Okay. Thanks, babe. My wife is keeping me on schedule. All right, I gotta go. Off to my next venture. This is Stocks for Real. Like, subscribe on your way out. Become a member. Even when this chat is over, you can hit that little heart with the $sign in it just to show love. No shame in my game. Y'all take care. Oh, stay tuned. SoFi video coming out probably tonight. I'm gonna try my best tonight.